வணக்கம். Now we will see accounting conventions. The conventions may be called as standard practices. The first convention is convention of disclosure or disclosure principle. In accounting, when they are preparing the accounts, there are certain things that needs to be disclosed in their financial statements. According to this convention, any significant information or event affecting the financial position of the business concern must be disclosed. For example, when a company is preparing its balance sheet, they need to disclose the important material facts about the amount withdrawn or amount taken as loan by pledging the assets of the company. But certain arguments are against this. That is, everything should not be disclosed. Material facts, in the sense, secrecy should be maintained. But in the name of secrecy, the material facts to be disclosed must be disclosed according to this principle. The stakeholders will come to know the real position of that company by looking after the balance sheet published by that particular company. Now we will see the second one, the concept of consistency. According to this concept, whenever a business organization or an organization following a specific method in recording the transaction, they need to follow it continuously for all the years. For example, they are following a specific method in recording the depreciation, and first 2 years they were following a specific method. After that they are changing, again they are changing. Such kind of changing occasionally or very often should be avoided. And if it is unavoidable, then they have to show it why they have changed it. That should be justified. The depreciation is the best example for that. Third one is this convention of conservatism. Conservatism means playing safe. This is one of the important convention which is normally followed in specific examples or specific areas like recording of debtors and stock. For example, when they record the debtors, they need to find out who are all the good debtors, and sufficient bad debts provision must be made before showing it in the balance sheet. So playing safe in this recording of debtors, and second one in stock, they have to see what the right value of the stock. Normally they follow the market price or cost price, whichever is less. After that they started following that net realizable value. So this is also one of the important convention. Accordingly, they can show the real values of their assets. The last one is the materiality concept. Materiality means what is important, what is unimportant. So that principle or that convention needs to be followed in some of the specific areas like rounding of the values. For example, 999 rupees, they can make it as 1000. Even there is a practice now, when they add different values, If it is coming at in paise, they will round it off nearest the rupee. That is valid and accepted. And second important thing is considering the miscellaneous expense. For example, when they are buying one mug for using in a toilet, they can consider it as a miscellaneous expense. The cost may be 100 rupees, 150, whatever it may be. But when they are buying 1000 mugs, it is not considered as miscellaneous expense, but it is considered as asset. Like that, they have to make it very clearly whether this can be considered as miscellaneous expense or treated as asset. Like that, in rounding of expenses also, when we make rounding of thousands of items, we need to be very careful. So here also they have to apply what is the justification. That should be an accepted justification. A case story, there is one enterprise called Angel Enterprises. Here they are doing trading business in consumer durables. They are pledging their stock in one bank and they are withdrawing 3 crore rupees for their routine business, and they do installment business also. For that, they are writing off the depreciation every year 10%, and this debtors are calculated by deducting 20 to 22 percentage based on the nature of the collection and the nature of debtors, and they record all these transactions related to the stationery particularly used for this installment is considered as an miscellaneous expense. Now, how they are recording it as per these conventions? First, this loan against this stock, that is by pledging the stock, that is based on the first concept, that is disclosure principle. They have to mention that in the balance sheet. Second thing, they have to follow the method of depreciation continuously, so consistency concept, and the bad debt needs to be calculated and should be deducted from the total debtors, that is based on the conservatism concept. Then they are treating this stationery as miscellaneous expense, that is based on the material concept. I think you must have understood. Thank you. Thank you very much. We will meet in the next video with other concepts related to accounting.